Okay, let's pull back the curtain on this one. We're venturing into a narrative that feels less like street financial news and maybe more like some kind of high-stakes geopolitical thriller.
Yeah, it definitely has that feel.
But it's unfolding right now in our crypto markets. We're talking about $1 million Bitcoin.
Right, not just as, some wild fantasy.
Exactly, but as a bold prediction and from a really unexpected high-profile voice too.
And then tangled up with that, there's this potential seismic shift, maybe, in global crypto politics, involving China, no less.
Which is fascinating in itself. So this isn't just about price targets going parabolic. It feels like it's about power, perception, and really the future of digital finance.
The real complexity, I think, lies in how these two threads, this public figure's really audacious market call and this subtle, maybe strategic geopolitical pivot from China, how they might actually be deeply connected.
Right. What does that connection mean?
Exactly. What does it mean for the very fabric of digital assets, for global finance? And importantly, for you, whether you're an investor, just curious, or maybe prepping for that big meeting where this stuff might come up.
We're really seeing this unique convergence, aren't we? Political influence, these super volatile market dynamics, and these calculated national interests all swirling around crypto.
All swirling around this transformative power of cryptocurrency. It's quite a moment.
Absolutely. So our mission today, as always, is to try and cut through the noise, to distill the most impactful bits from, well, quite a stack of diverse sources we've looked at.
Yeah, we've got insights from Crypto Robot Podcast Prep, specifically on Eric Trump's forecasts and China's, let's say, evolving crypto stance.
And alongside that, a pretty robust collection of supporting analyses, some really compelling case studies we'll get into, and critical market metrics to try and ground all this.
The goal is really to equip you with the insights needed to truly understand what's developing here.
Yeah.
Give you that shortcut to being, incredibly well-informed.
Exactly. This isn't just about the what, it's the why. We want to explore the forces driving these big statements, uncover the potential strategic moves happening on a global stage.
It's about understanding the chess game, right? Not just watching the individual pieces move.
Well put. Now, before we dive deeper into these really fascinating currents, just a quick word. If you find value in these conversations, if you want us to keep bringing you these deep insights,
Which we hope you do.
then please do show your support. Liking this deep dive, subscribing to the channel, hitting that notification bell, it genuinely helps us a lot, actually.
It really does. It boosts visibility in the algorithm,
Yeah.
lets this kind of content reach more people like you who are curious about this space.
And honestly, it empowers us to keep creating this type of quality crypto analysis for you. Your engagement, it really is what makes these deep dives possible. So thank you in advance for that. Okay, so let's kick things off with the statement that really grabbed the headlines. I mean, practically yanked them off the page.
You could say that, yeah.
Eric Trump, high-profile member of, one of America's most recognizable political families, he's gone on record predicting Bitcoin will reach a staggering $1 million.
1 million. It's a number that definitely makes you pause.
It's not just a big number, though, is it? It's a monumental claim from someone who, let's be honest, operates pretty far outside the typical crypto pundit circle.
That's the key thing, isn't it? What truly stands out here isn't just the sheer ambition of the price target, which, it's eye-watering.
Right.
It's the unique significance of a political figure, especially one with that kind of mainstream visibility, that close association to a major political brand, making such an unequivocally bullish forecast.
It definitely moves the needle on the conversation.
It does. It takes it beyond the usual crypto influencer sphere, and whether that's the intention or not, it kind of injects this degree of perceived legitimacy.
Legitimacy for people who might still see crypto as what? Niche, volatile, speculative.
Exactly. For those in traditional finance or just, the broader public, it's not just another investment prediction. It feels like it carries a different weight, a different kind of public endorsement coming from someone tied to that level of political influence.
It makes me wonder, when a prediction like this magnitude, comes from someone like Eric Trump, rather than, say, a seasoned crypto analyst, how does that actually change its impact, how people receive it?
That's a great question.
We've heard bold predictions before, right? Tim Draper, the VC, he famously called for $250,000 Bitcoin way back in 2018.
I remember that. Seemed wild then.
And Cathie Wood from ARK Invest, she's consistently held that $1 million Bitcoin target, backing it up with, tons of research.
Right. Very data-driven approach from ARK.
But Eric Trump, it feels like his commentary just sort of bypasses the traditional financial gatekeepers entirely. It hits differently.
That's precisely the insight we need to unpack, I think. It's not just about legislative efficiency or market fundamentals anymore. Well, a political endorsement, especially from an unexpected corner, it's not just about policy. It's about capturing the narrative.
Capturing a narrative. Okay.
It signals to a broad, often maybe skeptical segment of the population that crypto isn't just for tech bros or Wall Street quants anymore. It's entering the realm of mainstream political talk.
And that changes the psychology.
Fundamentally,
Oh.
for everyday voters and then, by extension, for the politicians who represent them. So the question becomes, is this just his personal financial prediction, or could it signal something more? A deliberate political dimension.
Like signaling a shift in how a major political party might view crypto, or even like integrate it into their platform somehow.
Potentially. It's definitely something to consider. That political angle is hard to ignore.
The idea of Bitcoin becoming like a prominent campaign talking point in upcoming U.S. elections,
Yeah.
that's really fascinating.
Imagine that.
Imagine Bitcoin moving from being this niche thing for tech investors to being, I don't know, a featured segment on a presidential debate stage.
That would fundamentally alter the landscape, wouldn't it?
Completely. It suggests that politicians might be actively recognizing the growing economic power, maybe the voter base, associated with digital assets.
And when someone from the Trump family speaks, their words often resonate deeply with a specific, highly engaged segment of the population.
Right. Their endorsement, even if it's informal, could significantly influence how that whole group perceives crypto, how they engage with it.
It's a powerful, definitely non-traditional channel for adoption, potentially.
So historically, these bold predictions, they have a mixed track record, let's be fair.
That's putting it mildly sometimes. Yeah.
Tim Draper's $250 K call, it was ambitious, but rooted in this idea about internet-level adoption.
Right, there was a thesis there.
And Cathie Wood's $1 million target, that's based on deep institutional analysis, market cap potential, gold parity arguments.
Very detailed research behind it.
But the source of Eric Trump's prediction, that adds this completely unique layer of intrigue, doesn't it?
Absolutely. It forces us to consider not just the market fundamentals or the tech adoption curves, but also these broader societal and political currents that could genuinely propel Bitcoin to those kinds of heights.
So it's about a new narrative potentially taking hold in places it hasn't before, maybe driven by a kind of populist appeal that just bypasses traditional financial analysis.
That could be part of it. It makes the source almost as important as the prediction itself.
So it's less about whether Bitcoin can technically hit $1 million and more about who is saying it will and what that public declaration might signal or even cause on its journey there.
Precisely. It feels almost like a stamp of approval from an entirely unexpected direction.
Pushing Bitcoin further into the mainstream consciousness and maybe, just maybe, right onto the political agenda.
Could be a pivotal moment. Crypto's political coming out party, perhaps.
Interesting way to put it. Okay, that's a fascinating look at the U.S. political side. But speaking of unexpected twists, what on earth do we make of Eric Trump praising China's involvement in crypto?
Yeah, that was the other part that really jumped out.
I mean, this is a country that for years now has been systematically taking apart its own digital asset industry. So praise, that feels like a strategic paradox we need to unpack. He actually expressed admiration for their engagement.
This is where the plot truly thickens, right? It creates this incredibly complex, almost contradictory narrative.
Contradictory is the word.
What's genuinely surprising here is that stark contrast between his public commendation and China's, well, very well-documented, often pretty brutal, history of severe crypto crackdown.
We're talking outright bans, right? Economically damaging bans on crypto mining back in 2021.
That saw the global hash rate just plummeted overnight and triggered that mass exodus of miners we all remember.
And the systematic closure of domestic crypto exchanges, strict trading regulations, just a general, like, unambiguously hostile stance towards decentralized digital assets.
Exactly. So for a figure like Eric Trump, who's generally known for, let's say, an anti-China political stance,
To put it mildly.
to then commend their involvement in crypto, it's genuinely unexpected. It demands a much deeper look at what might be going on beneath the surface with China's motivations.
It's almost disorienting, isn't it? For years, we watched China, a tech powerhouse, systematically dismantle its domestic crypto industry, citing financial risk, energy concerns.
The reasons were varied, but the actions were clear.
We saw that dramatic exodus of miners, the shutdown of major exchanges like Huobi, OKX. It was a very clear, very deliberate policy.
No ambiguity there.
So the critical question becomes, is China subtly shifting? Are they moving away from that anti-crypto stance to quietly, maybe even pragmatically, becoming pro-Bitcoin for strategic reasons we haven't fully grasped yet?
That is the million-yuan question, perhaps. It begs the question, is this potential shift a sign of genuine, albeit slow, policy reversal? Or is it something more calculated, a strategic maneuver maybe, to play both sides of the digital asset coin, gather intelligence, gain influence?
There must be some incredibly compelling reasons why China might be reevaluating its position, or at least adopting a more, nuanced behind-the-scenes approach.
There are several potential motivations floating around, and they're all pretty significant.
Okay, let's dig into those potential motivations, because they could genuinely reshape the global financial landscape. First, let's talk about the backdrop of yuan weakness. Could Bitcoin be seen as, a strategic hedge, an alternative asset for China amid concerns about the yuan's strength, its international perception?
That's definitely one of the leading theories, and it holds, I think, significant weight when you look at global economic trends.
How so?
Well, the yuan's stability, its international appeal, they've been continuous points of discussion, right?
Yeah.
Especially with trade tensions, economic slowdowns, this global push for de-dollarization that hasn't fully landed on the yuan as the clear alternative.
Right, the dollar is still dominant.
So if China sees its currency as vulnerable, even subtly, maybe diversifying its strategic reserves by quietly accumulating Bitcoin or just allowing alternative digital assets to flourish within its sphere of influence, that could be a powerful hedge.
A hedge against devaluation,
Right.
or a way to gain financial flexibility.
Both, potentially. It's a pragmatic way to de-risk against economic headwinds. Maybe even a way to manage capital flows for individuals or businesses without fully opening up traditional financial channels. Quiet accumulation is key here.
Okay, and then there's the angle of U.S. competition, that long-standing geopolitical tension. Could this be a strategic move by China to gain an advantage in the global financial landscape? Maybe challenge U.S. dominance? Or the dollar's reserve currency status?
This is a really profound consideration. It goes right to the heart of global financial power.
The dollar's role is huge.
Immense. It gives the U.S. enormous economic and geopolitical leverage sanctions, influencing global trade. So any moves by China that could subtly erode that dominance, or at least help create an alternative financial system that reduces global reliance on the dollar, that would be an incredibly strategic play.
So by engaging with Bitcoin quietly, or just softening its rhetoric?
China might be hedging against a future where the dollar's dominance is challenged,
Mm.
or maybe creating an off-ramp for countries looking for alternatives outside the traditional Western-dominated system.
Building options, spheres of influence in this evolving global financial order, where digital assets could play a big role.
Exactly, especially in a more multipolar economic world. Bitcoin offers a potential pathway there.
And finally, we absolutely cannot ignore the elephant in the room. The digital yuan, China's pioneering CBDC.
ECNY, right?
Could a more open stance on Bitcoin, this decentralized asset, paradoxically coexist with or even somehow complement China's aggressive push for its own centralized CBDC, positioning China as a leader in both kinds of digital finance?
That's precisely the tension and potentially the genius of this kind of nuanced strategy. It seems contradictory on the surface.
Right. One is total control, the other is the opposite.
A CBDC like the digital yuan offers unprecedented centralized control, surveillance, a powerful tool for monetary policy. Bitcoin represents, well, fundamentally decentralized, permissionless financial freedom.
So how could they coexist?
China could, strategically, be exploring ways for these two seemingly opposing forces not just to coexist, but maybe for one to inform the other.
Ah, okay. Like learning from Bitcoin.
By appearing to soften its stance on Bitcoin, maybe they're gaining invaluable insights into its tech, its global market dynamics, how international adoption works, all without fully endorsing its decentralized core values.
So they could aim to lead across the entire spectrum of digital finance. They're controlled digital yuan and having influence or intelligence on the decentralized crypto space.
Potentially, it allows them to project global leadership, gather competitive intelligence, maybe even exert influence in areas they previously shut down, ultimately bolstering their position in the whole digital economy, whether it's centralized or decentralized. It's quite sophisticated, if that's the play.
So whether it's a genuine, slow policy reversal or this incredibly sophisticated strategic game, the implications for the global crypto landscape are just massive.
Undeniably.
Think about the sheer scale of the Chinese mining industry before that 2021 crackdown. If that comes back, even partially, the ripple effects would be truly seismic, wouldn't they?
Absolutely seismic. Let's really think about the profound impact if China were to seriously ramp up its involvement or reverse those bans. First, the miners.
Yeah, that exodus was huge.
After the 2021 bans, we saw this almost overnight massive migration. At one point, Chinese miners controlled, what, over 70% of Bitcoin's global hash rate?
Incredible dominance.
They packed up rigs, set up shop in Kazakhstan, Texas, Paraguay, other U.S. states, completely reshaping energy use and the geography of Bitcoin mining.
So if China reopens its doors, even partially,
It wouldn't just dramatically increase the global hash rate and the corresponding mining difficulty. It would create fierce competition for energy resources worldwide,
driving down mining profitability elsewhere.
potentially, and raising critical questions again about network decentralization, geopolitical control over this crucial infrastructure. We might even see a race to the bottom for cheap energy, maybe less green energy.
Or conversely, maybe they focus on their massive renewable capacity in remote areas.
That's also a possibility. Either way, a huge disruption.
And what about institutions? How would renewed Chinese interest or even just a less hostile stance influence institutional investment flows, the development of crypto infrastructure globally?
Renewed Chinese interest, even just a subtle shift in rhetoric or regulation, would almost certainly act as a catalyst for institutional investment.
Why?
Because large global institutions, pension funds, sovereign wealth funds, big asset managers, they're inherently risk-averse. They operate under strict rules.
Political uncertainty is poison for them.
Exactly. And a lack of clear, consistent regulation from a major global player like China is a huge deterrent. But if China, with its massive economy and tech prowess, were seen to be even cautiously engaging with crypto,
It signals a change.
it could signal a new level of maturity, acceptance, geopolitical stability for the asset class. That perception shift alone could unlock significant capital that's been sitting on the sidelines.
Leading to more infrastructure development, new financial products, deeper integration into traditional finance.
All of the above. It would essentially be seen as a major de-risking event for many hesitant large-scale players globally.
And finally, global adoption itself. Could China's re-entry, whatever form it takes, accelerate mainstream global adoption? Or could it create new geopolitical fault lines in the crypto space? Feels like it could go either way.
Highly probable we'd see a complex mix of both, acceleration and new fragmentation.
Okay, how so?
On one hand, China's sheer economic weight, its massive consumer base, its rapid tech adoption, that could undeniably accelerate mainstream global adoption. If the world's second largest economy is actively engaging, even subtly,
It forces everyone else to pay attention.
right, other nations, economies, international organizations, they have to take notice, maybe adapt their own strategies. It could legitimize crypto in broader global contexts.
But the flip side, the fault lines.
It could absolutely create significant new geopolitical tensions. The U.S. and its allies might view China's strategic moves in crypto with deep suspicion.
Especially if they see it as an attempt to undermine the dollar or create a parallel financial system.
Precisely. This could lead to a kind of digital Cold War. Different nations or blocks vying for dominance or influence over different parts of the digital asset ecosystem.
Resulting in different regulations, competing tech standards, distinct digital financial blocks.
Exactly. A dynamic with profound implications for how global finance is structured and governed in the decades to come.
It certainly sounds like we're on the edge of a really interesting new chapter. Geopolitics and decentralized finance are intertwining in ways that feel truly unprecedented. It's going to demand constant reevaluation.
Constant vigilance, definitely.
Okay, now let's bring this back home. Back to our listeners right here in the U.S. What do these powerful political endorsements, like Eric Trump's $1 million Bitcoin call, and these huge geopolitical shifts, like China's evolving stance, what does it all actually mean for your portfolio and for the broader Web3 ecosystem that's constantly bubbling up around us?
That's the critical question, isn't it?
Yeah.
The endorsement of political figures, especially those with big public platforms, it has a direct, often underestimated impact on how the market is perceived. not just by retail, but by institutions too.
It really makes you ask, is public perception maybe spurred by these endorsements, shifting the political landscape?
Right.
Or are politicians just reacting to an undeniable growing market trend?
Chicken and egg, perhaps.
Yeah.
But for U.S. investors, that political endorsement can be a really significant catalyst. It can set off a chain reaction.
I can definitely see that. Let's dig into the first big impact, regulatory clarity, and maybe the expansion of Bitcoin-related financial products. Could political endorsement actually lead to faster, more concrete regulatory clarity in the U.S.? And maybe a quicker expansion of things like spot Bitcoin ETFs?
Without a doubt, I think so. Political buy-in, or even just a public acknowledgement of crypto's growing importance, it often precedes and significantly speeds up legislative and regulatory action.
Why is that?
Well, regulatory bodies, like the SEC, they operate within a broader political and public opinion climate. They don't exist in a vacuum.
Right.
So when influential political figures or even whole political parties start openly discussing, acknowledging, even endorsing digital assets, it sends an undeniable signal to the regulators.
A signal that this isn't just some fringe topic anymore.
Exactly. It's an asset class with growing public and economic interest that needs a clear, comprehensive framework. This can dramatically accelerate the process of establishing clear guidelines.
And those guidelines pave the way for
Faster, broader expansion of sophisticated financial products, like the spot Bitcoin ETFs, which let traditional investors get exposure easily through stock exchanges without actually buying and storing crypto themselves, and potentially other derivatives, structured products down the line.
So that psychological barrier, the one that political and regulatory uncertainty creates for big investors, it starts to come down.
It starts to dissipate, yeah. Gives them the confidence they need to engage more seriously.
And that clarity, or even just the perception of clarity, leads right into the flow of institutional money, doesn't it?
Yeah.
How might that shift in public and political perception accelerate the flow of, well, vast institutional capital into Bitcoin and other digital assets?
Institutional investors, we're talking pension funds, hedge funds, sovereign wealth funds, corporate treasuries. Endowments, they are, by their very nature, extremely risk-averse. They operate under really strict fiduciary mandates.
They can't just jump into anything.
Absolutely not. Political uncertainty, lack of clear regulation, those are typically major deterrents for them. They simply cannot allocate significant capital to an asset class that exists in a regulatory gray area or faces potential political backlash.
But if there's a perceived endorsement, or at least more positive talk from political figures,
It significantly signals a reduced regulatory risk and also reduced reputational risk. And that can effectively unleash a torrent of institutional capital that's been patiently waiting on the sidelines.
money that's been waiting for the green light.
Exactly.
Yeah.
These big players need clear regulatory paths and a high degree of political acceptance to justify substantial allocations to a new, still evolving asset class. A political nod acts like a powerful green light, speeding up that flow significantly. And that creates deeper, more resilient market infrastructure too.
Okay, and then we have to talk about the retail hype cycle. Could a broader political endorsement, especially one as headline-grabbing as $1 million Bitcoin from a Trump, could that trigger a retail hype cycle earlier and maybe with greater intensity than we might otherwise expect?
It's not just probable. I'd say it's almost guaranteed to intensify it. Retail investors are exceptionally susceptible to mainstream narratives, perceived endorsements, especially when they come from figures they already trust or follow.
Yeah, you see that play out.
When a prominent political figure talks about Bitcoin hitting $1 million, that message doesn't stay contained within, crypto Twitter.
No, it breaks out.
It filters through mainstream media, talk radio, social feeds, reaching a much wider, often less technically informed audience. And that can spark a powerful fear of missing out, FOMO.
We've all seen that movie before, right? Suddenly your taxi driver's asking about Bitcoin, your aunt wants to buy that dog coin.
Exactly. A political endorsement, even an informal one, has this unique way of triggering that widespread FOMO effect. It creates this potent positive feedback loop. Public interest drives demand, demand influences price, higher prices fuel more public excitement.
Leading to a potentially more intense, maybe earlier retail hype cycle than if Bitcoin's growth was just driven by, say, technical analysis or fundamentals alone.
Precisely. It adds fuel to the fire.
Okay, here's where it gets really interesting for me. Because if Bitcoin does go to $1 million, it's not just about Bitcoin anymore, is it?
Not at all.
It's about the entire Web3 ecosystem getting this unimaginable turbo boost. So thinking about that cascade effect, What categories of altcoins do you think would explode first, and why?
That's the ultimate domino effect we absolutely need to consider. A monumental price surge in Bitcoin would act as this massive on-ramp for capital. Unprecedented liquidity would pour in, and it would inevitably cascade flow into other areas of Web3.
Where does it go first?
Well, first, you'd likely see significant capital flow into the established large-cap altcoins, particularly those with strong fundamentals, utility, real ecosystem growth.
Like Ethereum.
Ethereum, absolutely. It's the backbone for so much of the decentralized world with its smart contracts. It would be a prime beneficiary. Then you'd look at the highly performant Layer 1 solutions.
The Ethereum killers, or alternatives. Solana, Avalanche, Cardano.
Yeah. Exactly. Those blockchains designed to handle transactions faster, cheaper than Ethereum's mainnet currently does. And specific innovative DeFi protocols. They'd likely see an explosion of growth.
Why?
Because this newfound liquidity is always seeking new opportunities, higher yields, cutting-edge functionality. Money naturally flows towards the next frontier of innovation and potential returns.
And beyond just those established players, what about the newer, maybe more speculative frontiers, like NFTs, or that rapidly growing synergy between AI and blockchain projects? How would they ride this wave?
Oh, absolutely. The renewed interest in capital from a $1 million Bitcoin scenario would undeniably refuel the NFT market.
More than just digital art this time?
Potentially much more. We could see not just a resurgence in digital art and collectibles, but maybe a massive influx of investment into blockchain gaming assets, the tokenization of real-world assets like real estate, intellectual property, maybe even new kinds of tokenized experiences.
So NFTs moving beyond PFPs into something more integral to digital identity, ownership, the metaverse.
That's the potential, yeah. And furthermore, that growing synergy between AI and blockchain, that's a real hotbed of innovation right now.
How would a Bitcoin surge help that?
A surging Bitcoin market provides the necessary venture capital, the research funding, to really accelerate development and adoption in that hybrid space. We'd see projects combining AI's power for data analysis, smart contract optimization, predictive modeling with blockchain strengths, decentralization, immutability, security, data ownership.
That synergy could lead to entirely new industries, couldn't it?
It really could. Huge potential there.
What about stablecoins and the broader push for tokenized assets? How do they fit into this accelerated Web3 future? Stablecoins are often seen as the backbone of liquidity, right?
You're absolutely right. Stablecoins are crucial. They're the liquidity bridge between traditional finance and the crypto world.
So with more capital flowing in,
the demand for major stablecoins like Tether, USDT, USD Coin, USDC, it would surge dramatically, cementing their role as a fundamental pillar of the crypto economy. They're the crucial on-ramps and off-ramps for traders, investors moving between fiat and crypto.
Would that drive innovation in stablecoins themselves?
Almost certainly. How they're managed, regulated, integrated into global payment systems, and moreover, we'd see accelerated development and adoption of tokenized real-world assets.
Like what?
Everything from fractionalized real estate, fine art, to commodities, even company shares. As the underlying blockchain tech gets more robust, more accepted by regulators, and the capital becomes available to facilitate these innovative markets, it just streamlines access to previously illiquid assets. Yeah. Opens up global investment opportunities in a new way.
Okay, one last piece here. How would a thriving, politically endorsed Bitcoin market with all these ripple effects, how would that influence the global race for central bank digital currencies, CBDCs? Would it spur more innovation, create more competition, maybe both?
It would undoubtedly do both, and I think it would intensify the stakes significantly.
How so?
Well, a robust, politically recognized, booming Bitcoin market would simultaneously highlight the powerful advantages of decentralized digital assets. Censorship resistance, global accessibility, true ownership.
While also doing what to central banks?
Putting immense pressure on them worldwide to accelerate and refine their CBDC development. It would spur innovation by forcing CBDC designers to really think critically about user experience, privacy safeguards, actual utility, compared to what decentralized assets like Bitcoin offer.
So it raises the bar for CBDCs.
Definitely. But at the same time, it creates intense competition. Nations would be racing not just to issue their own digital currencies, but to make sure they remain relevant, competitive, in a world where a powerful, politically backed, decentralized alternative like Bitcoin could potentially siphon off capital, talent, financial influence.
It becomes a high-stakes race for financial sovereignty in the digital age.
Exactly, where traditional institutions have to adapt, innovate, or risk being left behind by this parallel system.
Okay, we've talked a lot about these ambitious predictions, these strategic shifts, massive ripple effects. Let's try and ground some of this speculation now in concrete, real-world examples and maybe some analytical tools. We've got some great case studies that really illustrate how these bold moves can actually play out. Let's start with El Salvador, their groundbreaking Bitcoin bet.
Yeah, El Salvador is a truly compelling case study. Their audacious decision back in September 2021, adopting Bitcoin as legal tender. I mean, it was met with widespread international ridicule, right? Skepticism from the IMF, the World Bank.
A lot of people thought it was crazy.
For months, critics pointed to the volatility, questioned the economic viability. But now, after Bitcoin's recent rallies, El Salvador's position has dramatically transformed
From risky gamble
to one of strong, tangible profits on their holdings and, frankly, vindication. President Bukele, who was often derided, is now being praised by many for his foresight.
so it serves as this powerful real-world example.
A powerful anecdote, yeah, of how bold, often contrarian moves in crypto, especially by sovereign nations, can pay off significantly. For those willing to take the leap, endure the short-term volatility, they were pioneers, and that early bet is looking incredibly prescient right now.
Showcasing the potential for nation-states to maybe de-risk their economies from traditional fiat volatility.
That's certainly the narrative they're pushing, and the numbers are starting to back it up.
Okay, and then we have Michael Saylor and MicroStrategy, a name that's basically become synonymous with just unwavering institutional Bitcoin accumulation.
Michael Saylor, yeah. His relentless, almost evangelistic strategy of accumulating vast amounts of Bitcoin for MicroStrategy, often using debt to do it. That was initially viewed with immense skepticism, even alarm by many traditional financial analysts, corporate boards.
People questioned putting so much corporate treasury into such a volatile asset.
Absolutely. Critics questioned the wisdom. But during significant market upswings, particularly in the current rally, that strategy is now widely regarded as genuinely visionary.
Because MicroStrategy's balance sheet has benefited hugely.
Immensely. It demonstrates how a long-term, deep-seated belief in Bitcoin as a strategic reserve asset, even with those perceived short-term risks, can lead to substantial financial gains, increase shareholder value for a public company.
It's a powerful testament to believing in Bitcoin as a long-term store of value, a growth asset that can outperform traditional instruments.
That's exactly his thesis, and
Okay.
so far it's played out remarkably well for them.
And of course, a recurring theme today, ARK Invest and Cathie Wood, consistently projecting Bitcoin reaching $1 million.
ARK Invest, under Cathie Wood, yeah, they've been a prominent, consistent voice in the institutional crypto space. They haven't just projected Bitcoin hitting $1 million. They've meticulously backed those targets with deep, extensive research and analysis.
What's their methodology based on?
They consider Bitcoin's potential to capture market share from traditional assets like gold, its role as an inflation hedge, the accelerating pace of institutional adoption, network effects. It's a comprehensive view.
So it provides this credible institution-backed parallel to Eric Trump's forecast, albeit with a much more data-driven foundation.
Exactly. It suggests a broader, if sometimes controversial belief in Bitcoin's long-term potential within influential segments of the traditional financial world.
Yeah.
For ARK, it's not just a speculative number. It's a conclusion drawn from extensive research into its scarcity, network effects, potential as a global reserve asset, challenging existing financial paradigms.
Okay, so this raises that important question again. When we talk about $1 million Bitcoin, what does the fundamental data actually tell us about the feasibility, the sheer scale required, beyond just the aspiration?
That's absolutely crucial for any serious investor or even just a curious observer.
Yeah.
We need to look at specific metrics that go beyond just the price chart.
Like what?
The Bitcoin long-term log chart, for instance. It's invaluable
Why logarithmic?
because it illustrates BTC's historical trajectory over multiple halving cycles, showcasing those previous exponential growth periods. When you view it on a log scale, it reveals these surprisingly consistent patterns.
Giving context for how such a target, while incredibly ambitious, maybe isn't entirely unprecedented in terms of its growth patterns over long periods.
Exactly. It lets us visualize past bull runs, understand the compounding nature of its network effect over decades. It gives a historical precedent, at least, for these kinds of parabolic moves. Doesn't guarantee it, but provides context.
And to really grasp the capital required to reach that valuation, we should look at realized cap versus market cap, right? Sounds a bit nuanced, but critical.
It is nuanced, but super important. Realized cap versus market cap is a powerful metric for understanding the depth of conviction in the market.
Explain the difference simply.
Okay, market cap is just the current price times the circulating supply. That's the paper value that swings wildly with every trade. Realized cap, on the other hand, values each Bitcoin at the price it was last moved on the blockchain.
Ah, like the cost
Think
basis.
of it like that, yeah. If everyone who owns Bitcoin bought it at a certain price, realized cap totals that actual cost basis across the network. So for Bitcoin to hit $1 million,
We don't just need existing holders' portfolios to go up.
no, we'd need a dramatic increase in the realized cap. This highlights the sheer amount of new, committed capital actually entering and staying in the market, not just paper gains from existing holders or short-term speculation.
So it tells us how much real economic conviction is flowing in, a more robust indicator of market strength than just market cap.
Precisely. It's a much better gauge of the actual capital foundation supporting the price.
Okay, and going back to our earlier discussion on China, hash rate and mining difficulty, those would be absolutely key metrics to watch if China even considers re-entering the mining scene. How do they work together to show us what's happening?
Right. Hash rate is the total computational power dedicated to mining Bitcoin globally. Basically, how much horsepower the network has. Mining difficulty is that automatic adjustment the network makes every 2 weeks or so.
Skip block times around 10 minutes.
Exactly. It ensures new blocks are found consistently, roughly every 10 minutes, no matter how much hash rate joins or leaves the network. So if China were to significantly re-enter the mining space,
We'd see hash rate jump.
almost immediately, a rapid increase in global hash rate as their powerful mining operations come back online, and that would be followed by a corresponding rapid upward adjustment in mining difficulty.
Why are these vital to watch?
Because they directly reflect the network's security, its decentralization or centralization if one country starts dominating again, and the economic incentives for miners. A large, sudden shift here would unequivocally indicate significant underlying changes in the network's operational geography, its geopolitical landscape. It's a direct signal.
And to track the raw liquidity, the fuel pouring into the market. Stablecoin flows, specifically USDT and USDC inflows onto exchanges, would be crucial to monitor, I imagine.
Indeed, tracking stablecoin flows, particularly the net inflows and outflows of major stablecoins like Tether USDT, USD Coin, USDC, onto centralized exchanges, that serves as a primary liquidity signal.
How does that work?
When large amounts of stablecoins are moved onto exchanges from private wallets or fiat on-ramps, it often indicates increased capital that's ready to be deployed into the broader crypto market.
People converting fiat, getting ready to buy Bitcoin or alts.
That's usually the implication. Conversely, large outflows from exchanges can signal profit-taking, a move to safety during uncertain times, or maybe a shift to self-custody. These flows are a direct, real-time indicator of the capital available and poised to drive significant market moves. It's like watching the money supply specifically for crypto.
Okay, and finally, for institutional demand, the smart money. CME futures open interest and ETF flows seem absolutely essential to watch.
Absolutely essential. CME Bitcoin futures and the flows into those recently approved spot Bitcoin ETFs. They provide critical insights into sophisticated investor interest and participation.
Who uses CME futures?
They're widely used by institutional players, hedge funds, professional traders, corporations for hedging existing Bitcoin holdings, for speculation, or just for gaining exposure without direct custody. Their open interest, the total number of outstanding contracts and daily trading volume, can signal institutional sentiment and positioning.
And the ETFs.
Similarly, the flows into spot Bitcoin ETFs, like the ones approved in the U.S., directly reflect the amount of new institutional and even some retail capital entering the Bitcoin market through regulated, traditional finance channels. These are invaluable metrics for understanding where the smart money is positioning itself, gauging the broader financial world's acceptance and participation. That's crucial for major, sustained price moves beyond just short-term retail hype.
So when we combine these ambitious predictions with these more sophisticated analytical tools, when we start to paint a much clearer, more nuanced picture of what a $1 million Bitcoin could actually look like, and the monumental shifts required to get there, gives us a framework to analyze, not just speculate wildly.
Exactly. It helps separate the signal from the noise. Hashtag tag outro.
So, okay, we've unpacked Eric Trump's $1 million Bitcoin prediction. We've peered into China's incredibly complex, evolving crypto strategy and considered the profound ripple effects these scenarios could have for U.S. investors, for the entire Web3 ecosystem.
It's clear, isn't it? The lines between high-stakes politics, intricate geopolitics, and decentralized finance. They're not just blurring anymore.
No, they feel like they're becoming inextricably intertwined, creating this incredibly dynamic, often unpredictable landscape.
What's truly fascinating here, I think, is that whether you're a seasoned investor closely watching these market trends, or maybe just a curious observer trying to make sense of this new digital frontier.
Or maybe you're prepping for that critical meeting where these topics are definitely going to surface.
Right. Understanding these intertwined narratives is absolutely crucial now. We've seen how a political endorsement might accelerate regulatory clarity, how subtle geopolitical maneuvers could entirely reshape global mining, how Bitcoin's potential trajectory acts as this powerful catalyst for innovation across all of Web3.
So this deep dive hopefully provides you with that essential shortcut to being well-informed, equipped with the critical insights you need to navigate this rapidly evolving landscape with, well, a bit more confidence.
That's the goal, because it's moving fast.
Absolutely. The next few years are going to be incredibly telling, possibly even transformative for global finance as we know it.
High stakes indeed.
So as we wrap up this deep dive, here's a provocative thought to leave you with. If Bitcoin does indeed hit $1 million, driven by this powerful combination of political endorsements and these strategic geopolitical shifts we've talked about, what previously unimaginable applications or maybe profound societal changes do you think will follow?
That's a big question.
Will crypto truly become the new global reserve currency, fundamentally challenging the existing financial order? Or will it just settle in as, a powerful new asset class within the existing system, something to really mull over until our next deep dive?